Turning our attention over to the livestock sector now. This week we had the opportunity to catch up with University of Nebraska livestock marketing and risk management specialist Elliott Dennis. As always, we had the opportunity to discuss the cattle markets with Elliott, but we began the conversation by looking at the spread of highly pathogenic avian influenza. Let's start out with a conversation about highly pathogenic avian influenza. Haven't really seen many headlines when it comes to that as of late. What can you tell our viewers about that today?
Yeah, I think one of the reasons why we're not seeing it is because it's really died off. We saw a huge increase in March, April, and really since May and June, we haven't really seen that many cases. We're talking about 15 cases throughout the entire U.S., and most of these have been confined to the layer, nothing here in Nebraska. And so we really were really kind of gearing up that May and particularly June might be really poor for the market, and really what we saw is we were able to contain it. I think some of the weather changed, and really we've seen some of those prices stay higher, particularly for eggs. We're at like the $2.88 per dozen. Broiler prices have tended to peak. Turkey prices are much higher, but that's where we felt kind of the largest impact in the South Dakota, Minnesota area. Relative to 2014, 2015, we're at about 40 million head of total birds affected. In comparison, 2014, 2015 was about 50 million. So I think it's great that we've been able to contain it, and I think it's, for the most part, kind of gone away.
Has anything caught your eye about this round of highly pathogenic avian influenza? Anything in particular about the market or just the reaction from U.S. consumers?
I think the biggest thing that I've noticed is that we've been able to see kind of similar incidences in the rates, and the big thing that a lot of people are saying is, hey, I thought we implemented biosecurity, and what happened to all these areas? So I reached out to USDA APHIS, which is their animal health inspection agency, and what they're gathering right now is actually repeat rates of high path, and essentially what they've shown preliminary is only about 20% of all the flocks that have been infected this time are actually got infected in 2014, 2015. The good news in that is that we've been implemented biosecurity, and we just need to continue to push that forward of trying to develop robust across all systems in the U.S.
Let's switch up the conversation a little bit and hit on the cattle market. We've seen some strong momentum, particularly as you and I have this conversation this week, but big picture, your thoughts on the cattle market right now?
Yeah, so when we particularly talk about exports, that seems to be driving a lot of these expectations in the market. We're talking about maybe we're up about 40% almost from January to April of this past year relative to 2021. And if you remember, in 2021, we actually had a really strong export year. And so roughly speaking, that's about $480 per head of export value in that carcass. So even though we feel like we're struggling here in the U.S. with the dollar, there's still a strong demand for U.S. beef, and so far it shows that the export market is willing to pay for it.
Conversation we'll have lots here on this week's episode of Market Journal has to do with interest rates, and the Fed had some news that just came out prior to you and I having this conversation. But as they try to kind of put a rope around the U.S. economy to slow the growth down, how do you see that impacting the beef market?
Yeah, so the news you're referring to is the Fed came out about 0.75% interest rate increases, the largest one-time increase in the last 20, 25 years. That's really important because ultimately what that does is it slows growth down, and we know that the product that is most affected by growth in the market is beef. It tends to be a luxury item for a lot of people, and so when we don't have a lot of growth in the market, we tend to see consumers kind of back off on their demand for certain products.
So we see the consumer reaction to all this. You said that might lead to a decrease in beef purchases at the store. Business owners also feeling the effects, and that has to do with the packers out there. Heard some news about one packer that said we're not going to be expanding because of this, right?
Yeah, so this is really important because the beef industry and the livestock industry at large during COVID was saying, hey, we need more processing capacity. And so the industry responded to that and said, we are going to build it. And particularly that plant in Tam, Iowa. There's one here in Iowa and in Nebraska that have said that we're going to expand capacity. But they can't do that when it's really expensive to build. And so some of those projects are on hold. So now we have a situation where we want to expand capacity. We have desires to, we have the cattle, or we have the other livestock products, but it's just too expensive. We can't make it cash flow. So that's going to be interesting to see play out, and really could pinch the market's ability to continue to expand and meet the export market.
An interesting piece of news came out by Smithfield Foods in regard to one of their production plants in California. What can you tell us about that?
Yeah, this is one of those further things that we talk about, outside sentiment really playing an impact on a business's ability to, to do business in a certain state. And the Smithfield plant in the LA area decided to basically shut their plant down over really rising costs of doing business there, some of the protesting that was happening there, and really they say it's not a friendly business environment to do. The benefit for us here in Nebraska and people in the Midwest is they said they're going to be looking for places to do business in the Midwest, so potentially recruiting another processing plant here in Nebraska. But ultimately that has implications for where production actually occurs. They have a large sow farm in Utah, which that they're likely going to start kind of dwindling down on those numbers and where those sows end up, hopefully here in Nebraska. But definitely have some implications, at least in the short term, for being able to process.
Interesting story to watch there. We've got just a little bit of time left. Elliot, I want to get your thoughts on some risk management advice back on the topic for our cattle producers today. What can they do to lock in some good margins right now?
Yeah, I think we've noticed, especially this past week, we were talking really high prices right now, and especially if we look at the price differentials between Nebraska and Texas, Oklahoma, and New Mexico. Nebraska certainly has a premium there. Has to largely do with that choice select spread. But we see really summer is that prime market for that choice cattle. But as we mentioned, inflation, we got softening consumer sentiment, potentially softening export demand. All of those would suggest that there's potential to move prices lower. And so I think it's important to talk with your marketing manager, talk as business owners, and think, when is it an acceptable margin to lock in this profit for future delivery, and be proactive about managing that risk, recognizing that there's factors outside of production in the beef market that can really impact the demand consumers are willing to pay for product, and ultimately the supply of cattle that we bring forward.